And we need to acknowledge that we are pioneers in a very new frontier. And you can act like cowboys or we can act like sheriffs. We would like to think we act like the latter, in as much that we are regulated. And we need to acknowledge that our business is held together through the continuum of being able to trade every day. And our clients expect this of us. So we have multiple channels and have accommodated multiple redundancy scenarios. So we trade on exchange and we trade through OTC, over the counter, where we have the luxury of using multiple exchanges and multiple OTC providers on the onshore side and the local side. And we don't favor one over the other. We have to remain agnostic. And as and when we need to pivot, we do. Obviously, we prefer consistency as it impacts our operations, having to move around as one does. But that is very much in place. So to address your question here, what is the risk? The risk is counterparty risk. That is the fundamental risk in crypto arbitrage. So you need to know who's managing your money. Can they manage your money? Do they understand capital markets? Do they know what to do when events play out? Where do you hide? When do you decide to stop taking profits because it's just pure greed? And I think we're very good at that. And we have a dedicated risk division. We have our shareholders come from a depth of broad economic markets and large financial institutions. And the counterparties that we associate ourselves with are all pretty much well known in the media. And we have spent as much time as we possibly can pursuing the due diligence and maintaining that relationship at a CEO level and a CEO level, and remaining in constant contact with them as and when we think the markets look a bit dubious.
Andrew, it sounds like you're pretty uniquely positioned to actually exploit possible rising premiums for your clients. But it also sounds like a case of too good to be true. Why isn't everyone doing it?
Yeah, so back in 2017, 30% premium a day. Wow. Make this thing a bit retail, give a few news articles across various media channels back in 2019, 2020. Guys are still making 300,000 to 500,000 Rand a year, or 200,000 Rand. Yeah, it does sound too good to be true. We've been doing this for 7 years now. And we're not alone. There are one or two other guys who do this well, I might add. We have good competition. But the emphasis around the regulation, this should hopefully bring some layers of trust, notwithstanding our personal backgrounds, which we make fairly available online and to the media as a means of people who don't know us being able to do due diligence on the individuals in this firm and what we do. But the space has got very congested at one point in time. And as I described, as the premium got squashed down, people who didn't have experience in trading markets, who didn't have the asset management background, struggled to navigate these tougher conditions. It's very easy to make money when the premium's at 5%. It's a lot more harder to make money when the premium's at 1.5%. So we're asset managers by background. Most of our competitors are data scientists who've written some really good algorithms. We don't like the algorithms trading for us. We like the algorithms bringing us data, and we trade on that information actively across multiple trading streams, looking at the inefficiencies of Rand, dollar, and various crypto assets that we are familiar with.